Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet. Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them high roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need to cop it, I wait for him to drop it. Ain't no option, let's get it popping. We chilling in the drop. I need some crypto, put it in my pocket. By any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet. Hey, hey, you talking to the Prophet.
Buenos dias. Okay, let's see. We have Folks 46, Scorpion, Sniper Princess, Antonio over on the Thetas. And then we have, let's go back up, Joe Fernandez, Baute Breakout, Scott, Brady. What up? Antonio. What's going on, Antonio? Michael. Scorpion on both sides. Sylvia. Jerry, of course. Me and Jerry had a nice long talk yesterday. Talked about money units. We're going to talk about money today. We're going to talk about dollar privilege being lost, hegemony disappearing. Maybe it's a good thing. Let me say hello to Todd B, Mark Klein, Demayan. I get that a lot. Darting uphill, Simon Powell, JR, Adam, Fishing Magician, CC Brown. Okay, cool. All right, that's pretty much the whole the opening crew, the original crew. So let's see. Yeah, I was wondering what did he mean? What did you mean, Jerry? Grabbed a nice what? I'm thinking it was one of the lines from the song by Kick Boy. Anyway, cool, man. So I hope everybody's having a good day. Let's go to our non-commercial, commercial, non-commercial breaks and take some time. A chair. Yes, a chair. That's what it was. He pulled up a chair. Go and, while I play our non-commercial breaks, throw a like on the channel. I can't figure out how to catch the live office hours. You have to be a subscriber to Money Map Press. And so, yeah, you got to do that. So if you're a subscriber to Money Map, then you can do it because it's a private, it's like an opt-in thing. So it's like a separate deal. And we're working on another deal. We're working on another deal right now with a new broadcasting company, which I won't announce just yet. That could be kind of fun. So I will let you know as we get closer. But I'm excited about what they're trying to do. It's very interesting. It's the merger of an exchange and live content. That'd be kind of cool. So imagine if we were talking about a token and then you could just go one click and you could own it. Or we were talking about a token like Link and you could just go one click and you could sell it, which would also be cool. So that'd be cool. Dave and Ash, what up? How you guys doing? Good, I hope. All right. So we're going to go do our commercial, non-commercial breaks because we don't have sponsors, because we don't care. And then when we get back, hopefully you've showered me with likes. I want this to be the bukkake of likes. For those of you that know what that means, you're welcome. Okay. Okay, man. Timothy, good to see you. All right. No, you know what? It's not NDAs. I won't even sign NDAs. Anybody that wants, listen, if someone asks you, you have to sign this non-disclosure. It means that their idea is so flimsy that anybody could copy it. Think about it. If you've done all this work and you've created something massive, it shouldn't be easy to one-click reproduce, like Pancake Swap, Donkey Swap, Goose Swap, Swap. All these stupid swap things that are just copies of Uniswap and copies of Uniswap v2 and v3 that are just simply photocopies, and then they get mad. We're not getting fair treatment, like the Sushi Swap guys. We're not getting fair treatment from Optimism because A16Z is invested in Uniswap. That's what you get, dummies. You didn't create anything. You just photocopied Uniswap. Don't try to act like you deserve fair treatment. You don't deserve nothing. Come on, man. Anyway, it is what it is. Yeah. So let's look at some prices. Let's look at some prices and let's see what's going on in the markets. The Bitcoin is down a little bit. It's down about 5%. Well, it's had a pretty good week so far. It's still up to almost 13% of the week. So it had to give up some of the ghost. It'd been going straight up for like 2.5 weeks. So calm down, Bitcoin. Calm down a little bit. It was kind of butting up against 47. I think there was, well, whatever, psychological resistance. I mean, it's up from 28 2 months ago. My wife bought the dip. Everybody's wife bought the dip. Ethereum's down. Ethereum's getting beat up a little bit. So Ethereum, you look at the weekly performance now because the day you have to subtract out 5. So Ethereum's down 1% and change, really. And then the Bitcoin is down. I'm sorry. And then Cardano is down. So 7.8. So make it 2. Let's call it 3%, but it's up 25% of the week. Still a pretty good performer when you look at the list. There's only a few tokens that outperform that. Near being one of them. Near is crushing. So it's coming back. Near is coming back. We'll see. The Polkadot down 6 on the day. So it's down, down 1%, 1 and change on the day, but it's up about 8% on the week. Still good. 43 on the month. Still really good. Protocol numbers, baby. Matic, $1.30 is up 23% on the week, 35 on the month. It's up. So it's actually faring better than Bitcoin. So anything below about 5% is doing better than Bitcoin. So Theta is in the bunch. Filecoin is about blah. VeChain down a little bit worse. I missed Binance hack or Binance is a dumpster fire. Cosmos down 7 and change. So it's down 1 inch. 1 inch had a pretty good run. It's up 14% of the week. 1 inch is down a little bit. Engine down 8. Near up 7. Shining light. Shining example. Near gets the LeBron James award.
LeBron James.
That's Near. Near got that LeBron James award. So good for Near. I would imagine that at some point, since it's a project was heavily financed, well, in part by Coinbase Ventures, it would seem reasonable that at some point Coinbase is going to push out Near to Coinbase. Now you wonder how they're going to integrate it. Is that their version of Ethereum? Originally, I thought it was. It does everything right now via WebAssembly that Ethereum 2.0 wants to do, endeavors to do years from now. Near already does it now, this second, right now. I don't know if people realize that. Everything Ethereum is trying to do, Near does it right now already. Does it. It's ready this second, right now. It's weird. It's weird that that's not exciting to people, but there's a lot of embedded psychological investment. There's a lot of embedded old school investment. There's a lot of embedded maybe misunderstanding of these markets. There's maybe some overconfidence in what Ethereum is and what it can be from some of the, I don't want to say older investors, but that kind of is what it is. The people that are pro Ethereum were usually super early in Ethereum. They have massive, massive portfolios of Ethereum, bags of Ethereum in those portfolios, and they pimp it on all of their friends. And these are the guys that are talking about Metcalfe's law and things like that, and misapplying a law that even Mr. Metcalfe himself said did not apply. It was just a visualization and only applied to telecom and only to a certain extent. Even smart people can sound real stupid when they start saying stupid stuff. So anyway, that's fine. As long as you guys are filtering all the information you get, then you're good. Frank, what's up, man? Michael, good to see you. Good to see you. Good to see you. Barno, also good to see you. Okay, Belinda, and Solid Gold and Hootie. Good to see all of yous. All right, let's get back to it. Nexo doing fine. It's down 8.7, but it's at least not going down anymore. It's melted up from like the low 120s, and it touched $2 yesterday. I was like, woo woo, and then of course it S the bed. A graph token right about Ethereum levels, still up on the week. Flow is getting beat up on the weekly and on the daily, but only because of the daily. So everything's giving up some of the ghosts today. It is what it is. OGN, oh man, it got up to $1 and it S the bed. It's down on 10.5%. Telcoin, all green sticks. Good for Telcoin. What else is exciting here? AR is down. Everything's down. Everything. Fetch is down, but up, right? 15 on the week. Audio is down, but up 30% on the week. My guess is audio bounces back up. And remember, it's right at Bitcoin levels. So it got up to $1.74. So audio was looking delicious. As far as, you're getting paid, I think 22% is what the return is now. 22% APY or return on asset, ROA. My info 123. Everyone tells me to buy EGLD. Why? Because it's the safe moon of right now. Everybody wants to EGLD, eGold. Yeah. Every creep on Twitter, everybody with 13 seconds of experience in crypto, eGold. Apparently they don't care that it got pilfered a few months ago and no one minds that. And okay. You get what you get. If you're taking your trading advice from Twitter, from a twit, from a bunch of douchebags that are marginally or completely unemployed, sitting on a couch collecting a check, and they just change their name from unemployed or bartender or stripper, and they change their title to entrepreneur, financial architect, capital mover. They always put binary options trader because they know no one can quality check that. They know no one can fact check that. Oh, binary. I trade binary options. Okay. I trade tertiary options. F you. Anyway, that's what it is. It's a low investment IQ right now, so be careful. New kind of network is all green candlesticks, so I'm not going to hate on it. It's way down from where I bought it. Still the most embarrassing loss I've taken. I haven't taken a loss on it. I own it, and it was a tiny, tiny position. But what frustrates me is that I allowed myself to do it without doing the research. Never leverage somebody else. Do your own research. Yeah, Rune got pilfered too. That's right. So I would be leery of both of those. You need to be leery of all of this stuff. Singularity DAO, $1.91. It's interesting. I started, let me say it this way. I had some extra cash sitting in an account over on Gate. So I swapped into some SDAO, which I will be staking. It's Epic 0 right now. It's going to be Epic 1 here in about 5 days. If you staked on Singularity DAO, for those of you that did it, you're going to have to unstake Epic 0 and restake into Epic 1. It doesn't roll over until 1 starts. So Epic 0 was the test Epic. So maybe you got some benefits from it, or maybe you just broke even on Ethereum fees, whatever. But the Epic 1 going on, you won't have to restake. You'll just be staked. YOLO Buck, what's up? Okay. Matrix AI Networks, actually, it's up 84% on the week, even with an 8% hit. It was basically up 100% yesterday, like on the week. You're like, what in the smoke? And then Singularity Net is all green candlesticks. It's nice and quiet. People aren't looking at Singularity Net, AGIX. If you want exposure in the AI space and you want the one that people are not looking at, Singularity Net's what they're not looking at. Register with SDAO rollover of the airdrop into their staking with no. What they're talking about with that is Solid Gold is if you register to have your airdropped SDAO, not the SDAO that you already have staked, but the airdropped SDAO. Well, I'm one of the people that they screwed up the airdrop. So they still owe me like 2,000 SDAO that I haven't been paid out in 3 months. I had my first payment. It then sucked that back and then made me ineligible. I'm eligible on day one, and then I click the button, and then every day after that it says ineligible, and it took all my stuff. The airdrop has not gone well for SDAO. They hired another company to do it, and it's been kind of a badness. So there we go. So, but yes, if you have unclaimed airdrop Singularity DAO that's still in there that you haven't pulled out, you haven't hoovered them out yet, you can roll those over into Epic One staking with no fees, and they're paying 26, almost 27% right now. So that's pretty dope. Yeah. Air suck, yeah, God. But it doesn't matter. I did so well. I can't be a hater, right? I did really well off SDAO. I was in at 20 cents, and I bought as much as I could buy, and I bought in every one of those pools. You know, they said, you can only buy in one. I was like, well, okay. And we tried the second one, and it worked, and we tried the third one, and it worked. And we're like, oh, okay. So on like day when we got our tokens, the first day, the token was trading at 96 cents from 20 cents. I said, oh, I don't know where this is going, but I know where it is right now. So I immediately, four and a half, almost to 5X. Yeah. So I took my original investment back out, and I'm on the house's money on a not insignificant sum of Singularity DAO. And now I'm getting 26.98%. So I'm not sad. I'm happy. So yeah. New York sucks. Well, Frank, guess what? You're in luck. You can set up an account with gate.io. I will write it in the chat. Gate.io. And guess what you can do? You can buy Singularity DAO on Gate. Veritax, what's up? Unsung, what's up? Frank W. Virulo. And let me say hello to Suze. What's going on? And Sebastian. Charles H. update yesterday. Let's see what Jerry's saying. What are you saying, Jerry? Charles H. update yesterday stated there is a systemic flaw in Ethereum programming language that allows all these hack issues. Curious of your thoughts. Oh man, you'd have to get somebody that's. I understand the state problem with Ethereum, like the difference between like their model kind of state recognition and UTXO. I could kind of explain that. I can't explain some kind of that you would have to. That's as Ben Gortzel says. That's getting into the nitty gritty, and I'm not a nitty gritty guy when it comes to Ethereum programming. I'm not a Solidity programmer. I don't know jack smoke about programming other than Charles and company are going to make it a lot easier with the Plutus Playground and stuff like that. So that's cool. Okay. Let me say hello to Bummy. Let's see. Clover and EGL CoinList. How do you feel? I don't know. Well, I'll tell you this. Nothing on CoinList works. CoinList is one of the worst, absolute worst platforms. If you want to have no faith in CoinList, you want to have negative faith in CoinList, subscribe to their trouble reports. They'll send you emails about every hour about all the tokens that are crashing, about all the system failures they're having. It's embarrassing. And I know that all these other platforms have similar problems. Do not subscribe to the trouble reports email. You will. So the second I started getting these emails, I was like, screw this. Dude, I sucked all my cash off CoinList, shut my account down. I don't want to have anything to do with CoinList. It is an absolute fail. Their customer service is 7 weeks. Seven times 7. 49 days behind. Charles is going to release Cardano smart contract update tomorrow morning. Yes, man. I wouldn't want to be betting against Cardano right now. No, sir. Veritax, fun fact, I stepped away from watching more than an occasional check for most of the summer, came back, less stressed. My tokens were still in my wallet. Feels good. Yes. When you invest in projects you believe in. Yes. We try to tell people that. Veritax is speaking the truth. Invest in quality projects that you can explain to your grandmother that you believe are going to be significant, not tomorrow, not next week, but a year, 2 years, 3 years from now. And you can sleep at night. You can sleep at night. Yeah, well said. Cardano is my favorite token. Cardano is my favorite token. But my favorite project, and again, this is definitely not investment advice, but my favorite project is AGIX, because I think it will make the biggest change to the future of humanity. But since I can't guess all of the individuals, I choose to. But see, okay, real quick, Jerry, all Ethereum projects can be exploited because the base language isn't capable of the data necessary to secure. Oh, hence Haskell. That could be true, but that's also, one of the reasons Binance is in so much trouble for Binance Smart Chain, that apparently they no longer have, they're not even a part of it. They're like, what? Binance Smart Chain? We have nothing to do with that. Lie. CZ is like, it's not me. Lie. You weren't saying it's not me a year ago. You were saying it's all me, you big-headed liar. Yeah, I said it. Big-headed liar. He's got a 5 head, an extra 4 head. I thought there was brain in there, but apparently it's just a little, it's a little like, what do they call those? A chop shop? He's got a chop shop in his extra brain. In his extra head space, there's a chop shop in there that steals your currency units away and converts them to his back pocket so that he can finance his running from the law in like 75 different countries. Anyway, I'm sure he'll eventually bump into Sam Fried Chicken Bankman in some grandiose indictment. One of those dudes is going to prison. One of those two retards is going to prison. My guess is it would be Fried Chicken. Fried Chicken just sponsored Mr. Wonderful. To be Mr. Wonderful is the guy that was talking crypto not even 2 years ago. It's a scam. The whole thing's a scam. I'm on the Shark Tank with 503 Gateway error Mark Cuban. It's a scam. You're a scam, dude. You're an old school hack. You're just here for the quick buck. Now it's obvious to you. Yeah. No S, douchebag. Anyway, I'm on fire today. Okay. Mostly, the technical, yeah. Look, Ethereum was the first one, guys and gals and pronouns. Ethereum was the first one. It was a proof of concept. It was an amazing one, but it probably is going to turn out that it lacked a lot of the flaws and challenges. They weren't concerns. They weren't kind of build concerns for the original developers, right? For the co-founders, for Charles and for Vitalik and for Lubin was kind of on the money side, for Dr. Gavin Wood. They had these kind of build concerns, these things they were trying to build, and probably it took, because the space was so new, it took a lot of these pilfers and attacks to realize that some of these flaws were much more concerning than others. How we weight risk. Well, they were building and weighting risk, and it's move fast and break stuff, or take 6 years to build something impeccable like Cardano looks like it's endeavoring to become. So there's two paths diverging in the woods. Ethereum, ETH, which became ETH Classic, and then ETH after that, after the DAO hack, chose the path most traveled. Cardano and to an extent Polkadot chose the path least traveled, and here's where we are. Crypto Gamer says the XRP army got pissed when I stated that I sold my entire bag and bought AXS with it. Well, I don't even know what AXS is, but I do think that's funny. And yeah, a lot of people are very emotional about XRP, and I get it. Just don't embed your emotions into these tokens. I would just say that. Pablo, what's going on, man? Cool. Okay. Let's move along. So we got a price check. Great. We get it. Yeah, I definitely listen real quick to sum up the XRP kind of thing. I will definitely be back. Oh, Axie. Okay. I think Axie's a little, whatever. It doesn't matter. It's not for me. I think it's a little pumpy. I think it's kind of but who knows, right? There's all sorts of, what I have been doing recently is going back to tokens that I passed on. And I said, is there anything here? So like I went and looked at Solana again. I'm like, okay, is there anything here that I feel like I don't have exposure to? And I guess as part of the greater exposure to smart contract platforms and protocol layers, yes, but I'm still not excited about it. It just doesn't look like anything all that interesting. So I said, okay, well, I'm gonna pass on it now. Now I am we've had 2 or 3 big weeks. I'm taking some of the assets I was less excited about, or that I am now less excited about, that I had grabbed, November, December, January, and I'm starting to scale back. So I have 3 or 4 assets that I'm doing really good on. Even if you go over like 6 months, I'm still up significantly. So I'm going to scale back, and I'm probably going to take my original investment back out of those and put that original investment evenly dispersed between my top 4. There's the top 4 that I can always say when anybody says, what should I get? There's 4 answers. It's one answer. They're hyphenated. It's simple. Bitcoin, Ethereum, Cardano, Polkadot. You want to dummy proof your friends? Bitcoin, Ethereum, Cardano, Polkadot. Bitcoin, Ethereum, Cardano, Polkadot. Right? Because you can tell people to do that and not feel bad about it. Flare airdrop. Where is did you get, okay, Crypto Gamer, I'm going to ask anybody here, let me know in the comments. Did you guys participate in the kind of Flare airdrop that was on BitTrue, where we parked our tokens on BitTrue? They gave us some tokens in the beginning of the year, which I immediately sold. Sold them for Cardano, where they did a 5x or 6x at that time. I don't know, whatever. It was great. So did anybody else do that, or did anybody else at least participate in BitTrue in order to get the early distribution of Flare tokens? I told my coworkers to buy only layer 1. Yeah, Crypto Gamer, I think that's the best advice you can give people. I don't even know if for everybody, if Bitcoin needs to be, I used to be a big proponent of 50% exposure to Bitcoin. I still think that's a safe bet, but I don't think that's where the velocity is. Even $100,000 Bitcoin's only like a 2.1x from here. It's not super dramatic, right? 200% is great, but when you have assets that do 20, 30% a week, they do, Cardano's at 11, almost 1,200% on the year. And you have these assets that can pull these big numbers. I don't know if more than 25% Bitcoin is a necessity, but I do think that you need exposure to protocol layers. And so anyway, I would urge everyone over the next few days, take some time, because we're way up. Even though we're having a down day, we're way up. Everybody should be doing great. The market as a whole, if you didn't panic, or General Kaizen, what's up? If you didn't panic, or you didn't do something stupid, like get leveraged, get over your skis, then you did great. You had your XRP on Nexo for Flare. Well, you'll eventually get it, Barno. I think, right? But if you played the BitTrue game, which made tons of sense, I had friends, I was like, dude, just put it on BitTrue for tonight. Take your Flare and sell it the first second you can sell it. They're like, well, but what if you could what if forever? There's all sorts of sayings, like some bumper stickers I could throw out there right now that have a lot of cuss words, but I won't. Gabi Alvarez. Just be smart, man. And yeah, no one ever got poor taking a profit. So take some of your profits, either take them back to Bitcoin because we like to mine that volatility, or if you think this is going to be part of a larger sell-off over the next few days, I don't actually think it is. I think this is just kind of a breather. I don't think we see a sell-off. I think we actually see things start to ramp, but no one knows. None of us have a crystal ball. Anybody who says they do is a big fat liar, because there are no reasonable metrics for an expanding asset class that's not fully formed. Keep that in mind. This is an expanding, brand new asset class that's not fully formed. It's like a new universe. It's an expanding universe. And we had the Big Bang a few years ago. 2009, we had the Big Bang. We're only 12 years into this. And really, as far as participation of institutions, we're only about 3 years into this. So this is a brand new universe. Give it 3 or 4 years to fully form. Patsy, what's up? What if we all had keys to a liquor store? We'd all be drunk or party. Yeah. Yeah, exactly. There's a lot of what ifs. Garth, what's going on? There's a lot of what ifs. So reduce the noise, reduce the emotions, skim some profits, man. Take some profits off the table. It's cool, bro. You might, if you think this is part of, if you think this is going to be a little reset here, because we've gone up for 2.5 weeks, go into some stable coin, USDC, right? Chill for a bit and see if there's some opportunities to rebuy. I have been range trading audio, because it bounces pretty hardcore. I mean, it was anyway, but I'm not range trading every day. What I'll do is if I get a pop that seems unrealistically high, like we've had recently, then I will sell about 2/3 of, and I'm in the profit on it. So I have my original, my profit was left in the token. It's left staking. I have a stash that I unstaked. It's a 7-day, cooling period or whatever. And that stash, I'll sell it at $1.40, $1.50. And when it retraces down to say $1.10, $1.05, 98 cents, I'll buy the stash back. I'll take the profit and I'll push it back into staking. So I'm basically taking the profits and mining those back into a bigger pool of staking tokens. And all of that is profit. So yeah, profits are great. That's right. Greed is good. Profits are great. I don't know. That's an Ayn Rand thing. That's an Ayn Rand thing that Gecko said. I think greed is a motivator. I don't know if it's good. I tend to lean more towards Dr. Gortzel, and I think that we are all a very interesting distribution. On one side, we have altruism, or the ability to do good for the greater good, whether it's for the individual or for the tribe, depending on how solitary or committed to society you are. And then on the other side, there's just plain greed. And so we are always a mixture of those two things. We're not wholly good and altruistic. We're not wholly evil and selfish and kind of like embark on like, rampant, vapid consumerism. And on the other side of it, we're not always doing good and not completely benevolent. So I think we are all an interesting mix. I don't know if greed is good, but it's definitely a motivator. It's definitely a motivator. Okay, let's switch gears. Let's talk a little bit. I found a really cool article that I thought I would go through. It was a Cointelegraph Pro article. So sit back, chill for a bit. I'll put on what should we put on in the background? I want something kind of chill. We're going to talk about the end of exorbitant privilege. It's a really good essay. I'm not going to word for word it, but I'm going to mostly word for word it because I think it's worth hearing. So sit back, relax, close your eyes for a second. We're not going to talk about money. We're just going to talk about currency. Okay, let's go. I guess this could be considered some kind of a conspiracy thingy, but it's not. It's kind of more about commonsensicalness. Now, let me caveat this. I don't agree with everything he says. I agree with a lot of what David says, but he is sharp and he does good research. And this is important. even if you don't agree with someone's determination or their kind of what they derive, what they distill out of a bunch of facts, it's interesting to listen to how people put their arguments together. So this is the first of two parts. I'm just going to read the first part. So here we go. This year has been rife with anxiety about inflation. Economist Lawrence Summers sent up an early warning flare in March, speculating that debt-financed government coronavirus pandemic relief, you just call that the STEMs, payments could overheat the economy. Summers got vindicated from consumer price index numbers this summer, including a 5.4% annual CPI growth print in June. Now, let me caveat real quick. Let me asterisk. That's a 5.4 print from June to last June. Do you guys remember last June in the heat of COVID shutdowns? Well, yeah, if you measure from the worst, the worst part of the economy in 12 years, well, you could argue that a bunch of ways. But if you measure from the peak badness, the bottom of the gully of COVID, yeah, a year later, you're probably going to get a big print. So again, keep that in the back of your mind. Inflation terrifies people for a lot of reasons, including its erosion of purchasing power, of wages, and the value of dollar-denominated debt. This is true, right? This is why savers get punished in environments where there's a lot of currency units created. So they create more currency units, so each currency unit has, on the average, less buying power because there's more of those little units out there, which means it takes more currency units to buy your widgets. In May, a leading foreign exchange trader named Stanley Druckenmiller, who you may have heard of, warned of an even bigger long-term risk of inflation, that it might threaten the US dollar status as the world dominant reserve currency. This is one of many reasons why the reserve currency could be threatened. Anyway, the US dollar is overwhelmingly the preferred currency for international trade. For instance, huge global oil trade is dollar denominated and settled. The dollar is also the most widely held foreign currency in central banks. And I don't know if they talk about it, but dollar denominated government debt, treasury debt, or treasuries, which is treasury debt, US debt that's held around the world is considered the most pristine collateral. It's the most held in outside the United States in foreign accounts. And they use a lot of times treasuries are used to kind of peg a currency. So when an economy, this is not in the article, but when a government needs dollars and there's a liquidity squeeze and there's not enough dollars, a lot of times they will sell treasuries because they're very liquid. They will sell those treasuries, whether that's bills, notes, or bonds along the yield curve. They will sell that U.S. government debt for cash because they have a cash squeeze, right? So when you need cash, what do you sell? You sell the easiest, most liquid form of collateral, which is U.S. government debt, right? But what makes markets, what makes economies is debt, assets, and confidence. And if debt increases and assets balloon and confidence degrades, that thing collapses. So keep that in the back of your mind. And let me do one thing so that you guys can focus. For those of you that want to actually read this, let me get this stupid thing off the screen for you. Boop. Okay, let's get to it. All right. We're still miles away from the kind of hyperinflation that can truly wreck a currency on an economy. Argentina is currently dealing with 50% inflation, which is a lot, but that's not hyperinflation. For those of you curious, hyperinflation is 15% month on month. So when people throw out hyperinflation, it's very whimsical the way they throw that term around. 15% month on month pervasive inflation. All right. There's a lot of evidence that current U.S. inflation is highly concentrated in a few sectors, and bond investors have remained stubbornly skeptical of inflation doomsday. But whether inflation pushes things along or not, it's clear the dollar's reserve status is already under pressure. In May, the dollar's share of global reserves dropped to a 25-year low. Think about that. Since 1999, the dollar's share has dropped from about 71% to just below 60%. And the competition is only heating up. The Eurozone has begun issuing debt that could make it a more viable reserve. China has spent more than a decade trying to make its currency more appealing internationally, including, some observers argue, through its creation of a central bank digital currency, the DCEP, which is the digital currency for electronic payments, or the digital renminbi, and the adoption of Bitcoin as legal tender by El Salvador hints at the possibility of a digital currency or other exotic instrument that could become part of the equation. Okay, let me just explain something real quick. A lot of the, we'll say, non-first world countries, they take on the dollar as their currency because their own currency does not have efficacy, and it's not stable. And so many of them will take on the US dollar and make it a means of payment, right? Legal tender. El Salvador did this in 2001, as I recall. My numbers may be off. I think it's 2001. Well, a lot of these countries that do that, they are holding a lot of US dollars, obviously, but it prevents them from being able to print and kind of manage their economy. Now they're held hostage by the US and US monetary and to an extent fiscal policy, because I guess it bleeds over, but for sure monetary policy, if you believe that. Well, they may look at the United States and say, ooh, pension, there's $35-40 trillion check you guys going to write at some point to bail out all these pensions that are broke. Social Security, that big giant unfunded quagmire, that's another, could be 100 trillion. So we go from 29-ish trillion to about 180 trillion. So what was it, 5x, 6x, 63, 18? Yes. So 6x, 600% increase. And maybe they go, woof, we don't want to go along for that ride. And I think that's what's happening right now. That was an asterisk. That's not part of this. Okay, anyway. So what's causing the decline, and why could inflation accelerate it? If the dollar's retreat continues, how serious would the impact on the US be? And how viable are the leading candidates for taking up the dollar's mantle? Now, my theory, asterisk, is that when these other nations start issuing their central bank digital assets, you don't necessarily need a reserve currency, because digital assets become the world's reserve currency, which can swap in real time. And if they can swap in real time, then you don't need to hold a currency. You can hold many currencies, and you can have robots and algos simply moving you back and forth into the most stable currency in real time. Humans don't have to do this. Robots can do this. Who's going to do that? Fetch an AGI. That was a side note that was completely unrelated to this article. And nowhere in this article will you find any mention of AI, but it's coming. And so you probably should layer your ideas on accordingly, because we're not trying to look at where the ball is right now. We're trying to look at where the ball is going to be, or where the puck is going to be in 18 months, right? Anyway, what is a reserve currency? In the 21st century, reserve status is not an official designation, but rather a competitive position. That's important to realize. This isn't something that you put a stamp on. It's transaction and treasury based, right? So it's a competitive position based on which currency is most trustworthy and most useful for global trade. And I would say at any one moment. That means the dominant reserve currency can change. Before World War I, it was the British pound, as recounted by the University of California, Berkeley economist Barry, not going to pronounce his name. The dollar continues to gain dominance in the U.S., as the U.S. sold arms to combatants during World War II, increasing its gold reserves, right? That transition also reflects the general rule that dominant global trading nations tend to have dominant global currencies. I want you to think about this. I'm going to read that sentence again, and you tell me who's the dominant global trading nation, right? Dominant global trading nations tend to have dominant global currencies. China. Businesses or governments need to hold American currency to buy American products, and the U.S. remained the dominant global manufacturer for many years, many decades after the end of World War II. Some countries also hold various currencies for use in stabilizing the global price of their own currency. If the pound drops against the yen, for instance, the Bank of England might sell yen from its reserves to try to bring prices back down. So this is the basic mechanism that algorithmic stablecoins try to mimic. Exchange rate policy has broadly shifted over the past century, though, and fewer countries now have formal currency pegs that demand large reserves. I remember listening to somebody talk about the currency peg situation in Hong Kong and how weird that was, and how they were selling dollars to try to maintain their peg. And they're losing faith in the dollar. Like, well, no, they have to. Their currency gets too rich, then they can't export, right? And so if your currency, you think about it, if you're exporting to your neighbor and your currency becomes too expensive, that's great for importing. It's bad for exporting because your products are now more expensive and less competitive. Does that make sense? Anyway, utility for trade and currency pegging aren't enough to make a reserve currency, though. The dollar also came to make up more and more of foreign central bank holdings because it was trusted, in part because it was backed by gold under the Bretton Woods Agreement, which we all know disintegrated not even 20 years after Bretton Woods. Probably 15 years before the Nixon shock, when we left the gold standard, we had already technically left the gold standard because of the Eurodollar system. Anyway, after the end of the gold standard in 1971, Nixon shock, the dollar retained its dominance not just because of U.S. economic strength, but because of trust, right? That confidence thing we talked about, trust in the ability of the U.S. government and its economic policies. The lack of any viable alternatives to the dollar, though, has also been crucial to its continued dominance. And that was probably its best defense, and probably is currently its best defense, is like, who's going to compete with it? I think that's a valid question. Why might the dollar lose its reserve status? There are at least 4 headwinds that could possibly threaten or at least weaken the dollar's position as a global reserve currency. They are fiscal weakness, national debt, right? We know, we just talked about that. Monetary weakness, inflation, right? Currency creation. Political instability, and I'm not going to go into that, and problems with the structure of the market for treasury bonds. Structural market problems, those things do kind of happen every now and then. There are no bid markets, things like that. There are kind of inefficiencies or dislocations in the debt market, auctions that go awry, things like that. But that's the exception, not the rule. So I would say that's probably the least of the four headwinds. Sounds like a band, right? Most international reserves are held in the form of bonds, which are a form of a loan. That means reserve status depends on a country's ability to pay off those loans. This is where we talk about confidence. In the case of the U.S. and the dollar, repayment is a long-term concern. According to Stanford University economist and bond market expert Darrell Duffy, DD, that's a lot of L's. Listen, there's 2 R's, 2 D's, 2 E's, 2 L's, man, 2 F's. This guy's got a lot of repeating consonants and vowels. Anyway, but not for the next few years or even the next few decades. Well, Darrell, I would be very careful to say the next few decades, that because you're saying a minimum 20 years. And the thing is, we've printed more money. Well, we've created into existence more money debt-ish. It's very difficult to explain. Let's probably not say. We've created more currency units and more bank reserves in the last year than we have in the probably 20 years prior. And I think the number is actually, if you count bank reserves, which we don't, but if you did, it's like in the last 100 years. We made more money last year than like in the last 100 years. And I think the number in the last 5 years is more than since the beginning of the United States. I think it's some egregious number like that. Anyway, I continue. Inflation is at least potentially a more immediate threat. One major article of faith that helped the dollar gain reserve status is that the U.S. would not start indiscriminately printing money, because dollar inflation would erode the value of dollar-denominated international holdings, right? The French franc lost its reserve status in the 1960s when the cost of the Algerian Revolution drove the French government to print money. They printed money, so their franc-denominated assets around the world est the bed. When the bond market while the bond market has so far ignored the threat of inflation, it could easily turn on a truly irresponsible administration. And we all thought Trump was irresponsible, but I think we live in an environment where all central planners are irresponsible. There are no good guys, there are no bad guys. I don't believe they're mostly evil. I don't believe they're mostly greedy. I think they're pretty greedy. And I don't believe they're altruistic, not even by a second. But I don't believe they're cold-hearted evil monsters. I believe, what's the saying? Never ascribe malice when the best answer is probably stupidity. So keep that in mind. That said, Ike Green argues that there are many factors that are more important than low inflation for a dominant reserve currency. Economic stature is key, which explains the long-term decline in dollar reserves. The rise of Japan, Mexico, Korea, China, Brazil, and many other countries as productive hubs means more of those currencies are circulating around the world as trade, and I would say trade and payment instruments in the mid-20th century. The U.S. now produces a little over 10% of all global exports. That's not much, bro. Making the dollar less and less useful for trade, but it remains a uniquely powerful economy, which seems to explain why the U.S. bond markets haven't buckled under inflation fears. The continued appetite for treasuries reflects the belief that a surge of debt spending right now will shore up the U.S. economy in the long term, and that it's a worthwhile trade-off for some inflation risk. We'll see. We'll see how that turns out. Equally crucial is the openness and reliability of financial systems themselves. This includes a stable system of financial rules and institutions that can quickly convert bonds or other instruments into cash. There was a scare on this front last March when the start of the pandemic triggered panic selling of U.S. bonds that overwhelmed treasury markets, and then you had these no-bid markets where everybody was selling and nobody was buying. This happened on a few. It wasn't all across the yield curve. It was on a few. I think it was the 7, but I'm not sure. But anyway, the good news, according to Duffy, is that this was a problem of market structure related partly to bank reserve requirements rather than a lack of demand for U.S. treasuries. But he says fixing problems in the treasury market is necessary for the dollar's continued health. Buyers want treasuries because they can be liquidated quickly, he says. The concern that the market's not going to work could change the price at which treasuries can sell bonds in the first place. Right? If you think an asset is less viable, you need to get a bigger yield out of that thing. So the price of the bond would go down, but the yield would go up to entice buyers back into the market. You guys get how that works, right? The bond price and the yield are like two sides of a seesaw. When bond prices go up, yields fall. When bond prices go down, yields rise. All right. We did a whole show on that, I think. Finally, political stability, trust, and transparency, this is confidence, are also important for a currency's dominance. This is a continued barrier to the adoption of the Chinese yuan, but it's also a rising risk for the U.S. given what some see as trade hostility, rising unrest, anti-democratic efforts by some U.S. political factions. The good news is that right now, most of the threats to the dollar are either gradual or fairly far out on the horizon. I don't necessarily agree with that. But then again, this is this guy. In the short run, there's no serious risk of dollar displacement, says Yaya. A former CIA analyst and adjunct senior fellow for currency issues at the Center for a New American Security. I don't trust Yaya. I don't know. Maybe that's the cynic in me. If your name is Yaya Fanusi, you're a former CIA analyst, and now you're an adjunct senior fellow for something that sounds really sketchy. The Center for a New American Security. I guarantee you those a-holes all wear MAGA caps. 100% they all wear red caps. Anyway, still, if and when enough of these underpinnings fail, a world could turn away from the dollar incredibly quickly. There's an assumption that a reserve currency benefits from incumbency, or what the tech world might call network effects, but history teaches us that those effects are hardly determinative or deterministic. The US dollar itself first overtook the British pound in international finance in 1925, just 10 short years after the founding of the Federal Reserve in 1914. Why would losing reserve status? Did you know, by the way, that when the Federal Reserve was established, so was the IRS, kind of formalized, a revamping, if you will. Kind of interesting. You look back at the underpinnings of these organizations and how they got official. Anyway, would losing reserve status hurt the U.S.? Running a global reserve currency isn't all wine and roses. The U.S. Treasury economist Kenneth Austin has argued that the reserve status harms the U.S. economy and manufacturing in particular because it makes U.S. exports more expensive. Robert Triffin, the Triffin dilemma. He told us about this a long time ago. in the 60s. But the current consensus is more focused on some major advantages the U.S. and its residents gain from dollar reserve status. Some of them are matters of convenience, such as the ability of U.S. travelers to pay with dollars around the world. That doesn't mean anything anymore. Your credit card goes in. You can swap in your credit card to any other currency in real time. That means nothing. I was over in Serbia, and I could use my credit cards, and they just swapped into marks or mark, whatever the Serbian currency was at that time. Same thing when I was in Poland, same thing when I was in Bosnia. It just switches into the local currency. You like pay a tiny fee. No, they didn't even want dollars. That's the funny thing. A lot of these guys don't even want dollars. They're like, oh, you can use dollars abroad. They don't want dollars, bro. And another thing, if you're traveling, don't use dollars, stupid, because then you look like an American. And guess what? Most people hate Americans. Welcome to the party. You can see why. All right. Other advantages are more profound. Let me see. U.S. businesses can manage invoicing and exchange rate risk. Other advantages are more profound. The most striking is what is known as seigniorage, that foreign governments are willing to trade $100 worth of real goods and services for a $100 bill that only costs the U.S. Mint a few cents to produce. The same more or less goes for treasury bonds. Yeah, that's they're buying when anybody buys U.S. government debt, they're buying a pull forward or a theft of future prosperity. They're not buying anything of there's perceived value, or they wouldn't buy it. But it's kind of like it's still the leper with the most fingers. It's the best house on a bad block, the cleanest among the dirty shirts, the stripper with the least venereal diseases. You just use whichever one makes the most sense to you. Anyway, let me get down to the nitty gritty because we could go through this. What comes next? Yes, here we go. Global currencies are effectively in competition for use in trade and reserves, with convertibility and stability the key metrics. After World War II, the dollar's reserve status was preserved in large part by the lack of competition. The economies of France, England, and Germany were quite literally reduced to rubble, and a series of devaluations linked to rebuilding efforts and imperial decline severely eroded faith in the pound and the franc. The U.S. was kind of like the last token standing. The landscape is now much different. The euro, the yen, the yuan, and the digital derivatives all have some features that would make them viable global currencies. China in particular has been aggressively pursuing greater international yuan flows for at least a decade. The development of the digital yuan has been widely interpreted in the West as part of that strategy. They have 140 partners, by the way. 140 governments have agreed to do commerce with the digital yuan. Calling Jeff Snyder. It's coming, bro. This is something me and Jeff, this is one of the few things that me and Jeff disagree on. He doesn't think that the digital yuan will ever launch. I think it's going to launch with pretty great effect. We'll see. Despite some declines, the dollar has held on to its reserve and trade dominance, at least for now. Experts believe each of the potential dollar competitors has some fatal shortcoming that makes it preferable. Yeah, that's a little bit of that's kind of echo chamber thinking. I think it's kind of like the farmer that's like saying, oh, that was funny when his cow died. That never happened before. Yeah, I know, man, because it was alive until it was dead. Just like housing never goes down until it does. So sometimes we can, even very intelligent people can find themselves in a state of echo chamberiness, right? There's about 5 of the 25 main cognitive bias have to do with, hearing your own words and believing them. China has domestic policy priorities that conflict with its reserve ambitions. We'll see. There's another companion piece to this article, so I'll bring it to you when we get it. But I am kind of interesting. Oh, by the way, Stanley Druckenmiller said he thinks some sort of crypto will be the next major reserve currency. That's kind of cool. So yeah, we'll see. We shall see. It's very interesting where the world's going to go. The yuan is coming for the dollar via the IMF. You guys remember that the IMF is not a real thing, right? They trade SDRs, which is also not a real thing. It smells a lot like bank reserves. It's equally as not useful. It has pretty much zero utility. So, don't worry. Don't worry about what the IMF do or don't do. I would probably be more curious about what the Bank of International Settlements is doing, because they're actually laying cash down. Them guys and us and gals. And yeah, my fellow attack helicopters. Anyway, so there you go. Kind of put that in the back of your mind. It's very interesting how all of this stuff is starting to build up. So we'll see. My guess is that China's digital asset is a lot more important than people believe. Let's see. And last question, Crypto Gamer says, if everything is manufactured in China, wouldn't everyone want to do business with China have to use the digital yuan? If they wanted to, China could kind of force the issue. So, yeah, I mean, China has a lot of stroke right now. And so I think people dismissing the DCEP are being very short-sighted, and you're not maybe looking out past the horizon a little bit. Anyway, but I don't think the yuan is coming for the dollar. It's not an attack on the dollar. Everybody thinks that what China does, here's the assumption. Not everybody. I shouldn't say that. That's too dramatic. That's unnecessarily dramatic. I think a lot of people believe that when China does this or China does that, or China sells treasuries, or China looks for liquidity, or China creates that it's all about dethroning the dollar, usurping the dollar. They need the American economy because it's a huge partner for China. China doesn't want to cut off America. China wants to be pro-China. I mean, if you're Chinese, that's pretty fair. Why should you look at the US right now? Do you trust these 87, 90-year-old douchebags that are managing this country? Do you guys trust these idiots? I mean, come on. If you grew up before black and white television, bro, you're on the shelf. You're an old dinosaur. You got to go, man. So when these other countries don't trust American politics, don't trust geopolitics, don't trust the debt that we have mounting, don't trust America's ability to manage its fiscal, scenario, don't trust monetary or fiscal policy or any of these central planning rubes, do you disagree with them? The patriot in you goes, oh man, yeah. Oh man, US. Then you back it off a little bit. Is the system right now so good that you can't imagine a better system? No. So if China pushes the DCEP, it's not to de-dollarize. It's to pro-Chinize, right? China being China is pro-China. Good for them. Do what you got to do. Suffer the consequences if it creates some kind of static. But honestly, China, bro, I'm with you, man. Do your thing. It's not anti-dollar. It's pro-China. So, a little perspective, folks. A little perspective. Let's call it a day. Stay out of trouble. I'll get you guys a link for tomorrow's show on Money Map. Other than that, stay safe. Stay in school. Don't do anything that my poor, insolvent, drunk, strung out on meth, and smoking Clearasil. Yeah, you heard it. The face stuff. She's smoking Clearasil. Now, I don't know if she mixes heroin with that or if she just does the Clearasil. She's never made that clear to me. Anyway, we'll see you next time. Stay out of trouble. Bye.
Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Profit to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the trap. I need some crypto, put it in my pocket by any means I rock. This is the Profit with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want them news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Profit. Hey, hey, you talking to the Profit. Hey, hey, you talking to the Profit.
It's all fake news. It's phony stuff. It didn't happen.